The crisis on Main Street has its roots in the LA real estate market. For more than a decade, real estate prices in LA have climbed into the stratosphere. Prices for single-family homes and condos went beyond what most of us could afford. Enter subprime lending. Mortgage bankers found a way to keep selling houses with high sticker prices by giving pie-in-the-sky mortgages that made every man who could afford a piece of property a king. Surging equities created money to buy goods and services, but there were victims. The LA's massive poverty areas, substandard and inadequate housing units needs remain unaddressed. We are still mostly a city of renters, shut out of the real estate buyer's market. Could anything good come from the meltdown in real estate? Be it ever so humble, there is no place like home, rented or owned. We welcome Patrick Duffy, a well-respected real estate consultant, to LA Business Today to talk about Home Sweet Home. Patrick, welcome.
Thank you. Thank you for having me here today.
It's wonderful to have you. How is your optimism holding up in the crisis industry you're in, real estate?
I would say cautiously optimistic. I kind of divide it into short, medium, and long term. In the short term, I think a lot of people are waiting to see what happened after the election, and now we're coming up on the holidays, so I think the first quarter of 2009 is going to be really important, and certainly moving to the traditional spring buying season. Medium term, it depends what you're looking for. There are a lot of deals out there. I have a friend who's in escrow now, short 30-day escrow. He just entered this week and hopes to close on a house that he probably couldn't have afforded in the San Fernando Valley. And then long term, it depends where you want to put your money and your investments, but I think if you're cautiously investing, that real estate is always a good source.
In other words, in the long term, it's still good to buy real estate, even though it's not quite the game it was.
Right. 15 to 30 year horizon.
Yeah.
Now, a long enough time to pay down a mortgage for residential real estate. If you're looking for 2 or 3 years to be able to flip it, that's a game I would never play, and I think it was one that a lot of people got in trouble on in the past.
I know you're not Merlin the Wizard.
Right.
But you do know more about real estate than most of us, and I imagine if you knew the answer to this, your coffers would be filled every day. But how low do you think prices are going to go? And where do you think it'll bottom out? How much longer do you think we're going to see prices falling?
Well, I think we've already been through a lot of the pain, and a lot of the pain has already been sort of wrung out of the marketplace because of the affordability issues, tighter credit, tighter underwriting standards. So we've already seen a huge loss in equity, certainly more on the lower end. I think as of October, prices in Southern California were down just over 30%.
30%?
However, that spiked sales up by 56%. So you're starting to see a lot of bargain hunters coming to the marketplace. And just over 50% of those sales were homes that had been foreclosed upon during the 12-month period.
And how about the foreclosed homes? Are there brokers scrambling to look for deals so that they can buy them and then turn them over? Is there a lot of that going on? Like speculation for money, to make money off of this? I mean, I hate to say it, but there is somewhat of a kind of buzzard climate that comes in a time like this, where you know, you would imagine people that want to make money would circle and try to grab up quality housing.
You're starting to see that. I know I have a client that in the high desert, sort of the Victorville area, they're going and buying 20 homes at once with the hope of renting them out. And what concerns me is, like, how big is that renter pool? What is the cash flow? What kind of rents? Because rents are starting to come down a little bit too in certain areas. I know in the low desert they come down about 20%. They've come down a little bit in the San Fernando Valley. I live in the Sherman Oaks area, and they've come down a little bit. So there is some softening. So I think people, if they're going to rush in and try to do that, you know, short-term investment, they need to really look at it as a cash flow scenario. So we're starting to see some of that, not on the level we did before. It's people who are coming in with a lot of cash,
right,
as well.
With the government coming in and bailing out, I mean, there's a lot of pressure to have the government come in and try to save, you know, people from losing their homes.
Right.
And it's awful to see people lose their homes. At the same time, so many people are renters. Isn't there some good that could come out of just letting the market go to where it would be reasonable for more people to be able to buy real estate?
Well, it kind of already is. I mean, that's why we've seen the huge declines. I think what the government's trying to do is make it more orderly, not have panic selling and buying like you might have in the stock market. So maybe what should be a 35 or 40% drop, 50% in some areas, doesn't go to 70 or 80 and then take another, X number of years to come back up again. So I think that's what they're trying to do. There's not a lot the government can do to try to really preclude overall market forces from having their say. They will eventually.
Right. You do a lot of consulting on commercial development, commercial real estate. It's in trouble too, right?
It's starting to get in trouble, and that's mostly because of, it's not so much because investors of commercial properties or developers overreached. They don't tend to be as emotionally invested. The terms on the mortgages are shorter. There's more cash and equity involved. So this is more due to the economic climate, especially on the retail end. We're having some retailers that we've seen for years going out of business, some favorite brands. And so that's starting to impact shopping centers, and then that in turn is making investors and lenders a little skittish to lend. So
in LA, we're a big market for that, right? Commercial real estate and development, one of the biggest markets in the world.
Huge office market, big retail market, yeah, substantial industrial market related to the ports.
Is there a lot of debt? Is there a problem with debt? Or would we see some skyscraper groups go bankrupt because of the debt problems?
It would depend. Well, I think there's been some concern. I know in LA there's been some changing of some office properties because the market had changed, and it set their assumptions about the market change. They thought, well, if the economy grows and rents go to this level, I can pay my debt, and then the economy changed on them. So it depends how long they've owned the property. It depends sort of like their own underwriting standards. So I think you're going to see some of that. It's a little early to see whether it's going to be sort of an overall trend. It's just in the beginning stages, I think.
The poor. There is a lot of substandard housing in Los Angeles,
right,
especially along the Figueroa corridor, and a lack of housing. I mean, there's a tremendous need for better housing and better standard of housings. What's it going to take in the real estate? You saw all this big growth in real estate, but it still remained a huge problem, the development in the poverty areas of Los Angeles. What's it going to take to change that?
I think government's going to have to step in with a different role. I think the problem so much isn't affordable housing, it's that there's lack of market rate housing. And when there's lack of market rate housing, prices for all types of housing rise. So people who are looking for affordable market rate housing crowded out the people that could only afford, 30 or 50% of the median rent. And so that's had a huge effect. You have NIMBYism. You have a lot of people who live in communities that don't want to see higher density. You have people who sit on community groups that don't even want to discuss new projects coming into their areas. So,
well, there is a big push in South LA, and a lot of the poverty providers are standing together to demand change. So hopefully we'll see that happen.
Right.
Tell me about Patrick Duffy. Did you know when you were 5 years old that you wanted to be a real estate guy? What got you into the business?
Well, I knew I couldn't be an actor because that name was already taken, so you get that a lot. I fell into it. When I went to University of California at San Diego, and I was an economics major, and the electives I took were in housing, and they were really interesting in applying economic theory to something that I could walk through, that I understood. We all have to live somewhere. So I started with a consulting firm more or less right out of college, and learned a lot under a gentleman I worked with, and worked for a home builder, worked for a developer, worked for a company that it was national in scope, and now work with a variety of different companies, a bunch of strategic alliances, and so every day's different.
And how about your family life growing up? Was this something where and now with your family, do they go, oh, Patrick's in real estate? Is there a great deal of pride in the fact that you're a real estate consultant?
I would say in a way, because I am a California native. We were talking earlier in the green room, I'm 7th generation, and I'm really proud of that. And growing up, my parents, to send us to college, would buy rental properties, hold and then fix them up, or pull out equity.
So there was a little real estate there in the background.
Scraping and
painting. A little
painting.
bit in the DNA?
Yeah, there were a lot of weekends scraping and painting, and I prefer to hire it out because I'm not that good at it. But yeah, I certainly saw the importance of cash flow and long-term holding. My parents never flipped anything. They still own everything. Awesome. I think they bought before. So very conservative investing philosophy.
Well, thank you so much for sharing this time with us and telling us a little bit about LA real estate. We look forward to having you back again in the future.
I would like that very much.
Best of luck to you, Patrick.
Thank you. You too.
I'm Sharon Jimenez for LA Business Today.